Is closed on December 1st, 2022. Let's start with our disclaimer. It's my trading plan for tomorrow, December the 2nd, 2022. Please remember I can be completely wrong, and any trade you make should be at your own risk. Look for the pattern with the early high. This is it. Tomorrow should also have the early high. We said there was a good chance of gapping down. That didn't happen. We said if we gapped up and held it, it could lead to a huge rally. We gapped up but didn't hold it. This is just what we said. This really isn't very impressive action. We hit a new recovery high, closed in the red. Not only did we close in the red, we closed under all the intraday highs. It's negative stuff if it's maintained, but we won't know if it's maintained till tomorrow. For all I know, we'll gap up here and all is forgiven. Don't know that until the open. MEJT said this drop was not for keeps, that we'd recover, and we did. This is normally a negative pattern, but by negative I mean we closed near the low. Now we didn't. So just as it's negative that we couldn't clear any of these highs, when this pattern doesn't go under these lows, it's positive. So the signals are mixed, and there's a decent chance we get the gap open tomorrow. Well, here's to mark bar 13 of a sequential sell signal. Bar 13 of the combo cell can finish early. So we have alignment of sequential and combo cell signals. If these work, ideally, you want them to work pretty fast. So it's a little bit disconcerting for the bears that we're still over our 200-day moving average. These things don't have to fail, but when they fail in grand style. Well, this was the count I had. We didn't go over this trend line with a gap and hold it, so this measurement goes away. I got that by connecting these two lines, but when you connect these two lines, you get a different picture. Now, I always enjoy learning things from other traders. This is a wave count I borrowed from somebody else. He was kind enough to share this with me. If you connect this high and this high, we stopped right at that trend line today, so that's resistance. Now, what's interesting about his count is he has wave gray A finishing here, right at a Fibonacci 38.2% of the distance between these extremes. And if you count A, B, C, all the fibs work perfectly. Now, yesterday, I couldn't come up with a count that said the rally was over, but today we can. Just because that count works doesn't mean it's the right count. But of course, if you can't come up with a count that says it's over, it shouldn't be over. Let's take a look at this last wave up. I mean, I can count A and B, and I can count C equal to A. All these things work. If you look at this in a 5-minute chart, this could be an ending diagonal triangle. I'm not claiming that's the only way to count it, but there is a count that works. Well, if this is the right count, which we don't know, and if C is equal to A, we come up with a number of 3477.38, just under this low. Now there's a reasonable chance that this low is going to hold. If you connect all these lines, you get a nice hit, and it's right over there. Not only that, you measure 50% from this high to this low, it's right there. So this could be a low, but if we go just under it and promptly reverse, it's a 2B low and it doesn't really change the picture. This would be the actual low, and that would be the retest if it works. In the past we had this as possible A, possible B. We had this as possible alternate A, but it could be the end of C. It's probably close enough to this number. I mean, you take this height here, that's really close enough to the 61.8, so that it's at least plausible. And if we get to that 34.77, it would be even closer. Doesn't mean it's the right count, but at least it might work. It all depends on this holding. If we gap up over this, it's a whole different picture. Because if we gap up smartly tomorrow, we have broken through a huge resistance. And if it isn't reversed promptly, we just went over the reasons why that low could have been it for the bear market. So Friday's pattern has the early high. We could gap down. The non-farm payroll report comes out tomorrow before the open. Often leads to a significant gap. And again, we have signals that we are mixed and the gap is going to be common. The arguments for a high here are trend line resistance, a completed wave count, a rally into a declining 200-day moving average, and a possible ending diagonal triangle. So if we gap down sharply, one can justify significant decline from here. I know some other people are calling for a crash. I'm not going to do that. But it could be a significant decline if we gap down smartly. Despite this, we've maintained good breadth. I want to see breadth failing if we're going to crash. That hasn't happened. And we're over the 200-day moving average. I would have liked to see this reverse promptly if we were going to crash. If we gap up smartly tomorrow, one would need only confirmation next week to claim the bear market ended in October and much higher prices lie ahead, because when valid signals fail, they tend to fail big. Today's normally bearish pattern did not close near its low. Unless we gap and promptly undercut the low of day, I'd expect to see higher prices tomorrow. Bears really need this early weakness if this candidate for a top is going to work. I'm hoping the direction is going to be clear before the open, and if it is, I'd expect follow-through lasting for quite a while. There's major resistance right at today's high. There are DeMark sell signals right at today's high. There are some other proprietary stuff of other people right here. This could be an ending diagonal triangle. The non-farm payroll report tomorrow should lead to a big move. If this is going to work, it should really work fast. We should gap down smartly and keep dropping. And if it doesn't happen, and particularly if we gap up smartly, I think by the end of next week, we're going to be able to say the bear market ended in October, because this resistance is either going to hold or fail in grand style. Tomorrow has the early high, doesn't mean you won't gap down, and that's today's call.